Welcome back to the channel XRP Army. Today we are stepping away from the daily noise and looking at the global chessboard. If you think this game is about charts and moving averages, you are playing checkers while the central banks are playing 4D chess. We are currently witnessing the complete restructuring of the global financial order. The era of the US dollar hegemony is fracturing and a new multipolar world is emerging. In this chaotic transition, trust is the rarest currency. Nations do not trust each other. Banks do not trust each other. They need a system that is mathematically verifiable, politically neutral, and dangerously fast. That system is the XRP Ledger. Today I'm going to explain why XRP is the only asset positioned to solve the trust crisis of 2026, and why the accumulation we are seeing on chain is actually sovereign nations securing their future liquidity. This is the biggest story in finance, and nobody is talking about it. Let's start with the BRICS alliance and the push for de-dollarization. For the last 3 years, we have heard rumors of a BRICS currency, but creating a new currency is hard. What is easier? Using a neutral bridge asset to swap between existing currencies instantly. XRP is designed exactly for this. It is the Switzerland of crypto. It has no allegiance to the Federal Reserve, the ECB, or the People's Bank of China. It is a decentralized protocol. We are seeing massive ODL, on-demand liquidity corridors opening up in the global south. Brazil, South Africa, India, and the Middle East. These nations are tired of the slow, expensive, and weaponized SWIFT system. They are voting with their volume. The volume on the ledger in these regions is exploding, even while the price remains suppressed in the Western markets. This is a geopolitical divergence. The East is buying what the West is selling. We also need to discuss the concept of sanction-proof settlements. In a world where assets can be frozen with the click of a mouse, true ownership matters. While Ripple, the company, complies with sanctions, the XRP Ledger, the technology, is open and permissionless. This nuance is critical. It allows for a layer of financial sovereignty that traditional banks cannot offer. We are seeing Tier 1 banks in neutral jurisdictions quietly running pilot programs to settle oil and commodity trades using the ledger. Why? Because it settles in 3 seconds with finality. In the oil trade, where prices fluctuate every second, speed is money. The friction costs saved by using XRP amount to billions of dollars annually. Those billions are the fundamental value proposition of the token. Furthermore, let's look at the tokenization of real estate. This is a narrative that is finally hitting the mainstream in 2026. Real estate is the largest asset class in the world, worth hundreds of trillions, but it is illiquid. You cannot sell 1% of your house to buy groceries. The XRPL is changing this. We are seeing projects launch that tokenize commercial real estate on the ledger, allowing for fractional ownership and instant trading. This locks up XRP. Every time a building is tokenized, a portion of XRP is required for the trust lines, the reserves, and the gas fees. As this market grows from billions to trillions, the demand for the native token to facilitate this ecosystem grows exponentially. We are moving from Internet of Information to Internet of Value, and real estate is the first big domino to fall. Now, let's pivot to the institutional side, the XRP ETF. After the Bitcoin and Ethereum ETFs, the market knew XRP was next, but the impact of an XRP ETF is fundamentally different. Bitcoin is a store of value. People buy it and hold it. XRP is a utility token. It is meant to move. When BlackRock, Fidelity, and others start scooping up XRP for their ETFs, they are taking liquid supply off the table that was meant for ODL utility. This creates a supply vacuum. You have two massive forces fighting for the same limited supply: the banks, who need it for payments, and the Wall Street investors, who want it for speculation. When these two titans collide, the price is the only release valve. We are already seeing the OTC desks struggling to fill large orders without slipping the price. This is the precursor to a vertical move. We also have to talk about market makers and their role in the current price action. You often see the price wick down to a specific level and bounce immediately. That is algorithmic trading. The bots are programmed to harvest liquidity. They know that retail investors set their stop losses just below the support lines. By pushing the price down, they trigger your sell order, buy your cheap coins, and then let the price recover. This is called a stop hunt. In 2026, these hunts have become more aggressive because the available liquidity is so thin. My advice? Remove your stop losses if you are a long-term holder. Do not give the algorithms the satisfaction of taking your position. If you believe in the fundamental thesis, the day-to-day volatility is just noise. It is the cost of admission for the ride of a lifetime. Let's discuss the derivatives open interest. We are hitting all-time highs in open interest on the futures market. This means there is a massive amount of leverage in the system. Historically, when open interest gets this high, we see a flush. The market will move violently in the opposite direction of the crowd to wipe out the leverage before resuming the trend. If everyone is long, the market will dump. If everyone is short, the market will pump. Right now, the sentiment is mixed, which is actually healthy. We want a wall of worry. Markets climb a wall of worry. If everyone was euphoric, I would be worried. The fact that people are skeptical, tired, and angry is the perfect fuel for a contrarian bull run. Another key metric is the developer activity on the XRPL. While price grabs the headlines, code builds the future. The number of active developers building on the XRP Ledger has doubled in the last year. We are seeing sidechains, EVM compatibility, and advanced DeFi protocols launching every week. This is not a ghost chain like some of the other top 10 coins. This is a vibrant, growing ecosystem. Developers follow the utility. They know that low fees and high speed are the only way to build sustainable dApps, decentralized apps. As these apps gain users, they burn more XRP. It is a slow, grinding deflation that eventually becomes a roaring fire. Let's zoom out to the monthly time frame. We are completing a technical structure known as a rounding bottom, or a cup and handle on the macro scale. This is a multi-year reversal pattern. It signifies a gradual shift in control from bears to bulls. The handle of this formation is forming right now. It is the final shakeout before the breakout. If you study market cycles, you know that the longest accumulation phases lead to the longest expansion phases. XRP has been accumulating for over 7 years. The energy stored in this chart is kinetic. When it releases, it will not be a slow grind up. It will be a violent repricing that leaves the sidelined investors in the dust. You cannot time this. You have to be in it to win it. We also need to address the psychology of wealth. Many people say they want life-changing wealth, but they panic when their portfolio drops 10%. You cannot have one without the other. The market tests your conviction. It asks you, do you really believe in this asset, or are you just here for a quick buck? The people who held Amazon from $5 to $100 and then sold missed the run to $3,000. Do not be the person who sells the future of finance for a quick 2x gain. Understand what you hold. You hold a share in the protocol that is digitizing the world's money. That is not something you trade. That is something you accumulate and pass down to your children. A warning on influencers. In the coming weeks, as the price starts to move, you will see a flood of new experts on Twitter and YouTube. They will promise you $589 XRP by next Tuesday. They will tell you to leverage your house. Ignore them. Listen to the data. Listen to the fundamentals. The price will move when the utility demands it, not when an influencer tweets about it. Stay grounded. Keep your expectations realistic, but optimistic. We are looking for a sustainable shift in value, not a casino jackpot. So what is the game plan for 2026? The plan is simple. Aggressive hodl. We have survived the lawsuit. We have survived the bear market. We have survived the FUD. We are now entering the golden era of utility. The banks are here. The regulations are here. The ETFs are here. The only thing missing is the price. And the price is a lagging indicator. It is the last thing to move. Do not let the silence fool you. The engine is running. The passengers are boarding and the doors are about to close. Thank you for being part of this journey. This community is the strongest in crypto for a reason. We do the research. We know the truth. If this deep dive helped you clarify your vision, please hit the like button and share this with the community. Subscribe to the channel so you never miss a critical update. Keep your eyes on the horizon, keep your ledger safe, and I will see you on the moon. Peace out.